What sort of a financial deal should Obama be seeking to strike when he travels to China next month?
No, I think this would be the time, because you really need to bring China into the creation of a new world order, financial world order.
I think his task will be to develop an overall strategy for America in this period when really a new world order can be created. It's a great opportunity. It isn't just a crisis.
You never want a serious crisis to go to waste. And what I mean by that, it's an opportunity to do things that you think you could not do before.
All these new challenges are bringing together about the biggest restructuring we have ever seen, not just of the global economy, but of the global order as a whole.
Now we can see a new world coming into view, a world in which there is the very real prospect of a new world order.
I think a new world order is emerging.
We have before us the opportunity to forge for ourselves and for future generations a new world order, a world where the rule of law, not the law of the jungle, governs the conduct of nations. When we are successful, and we will be, we have a real chance at this new world order, an order in which a credible United Nations can use its peacekeeping role to fulfill the promise and vision of the UN's founders.
You've got huge wage disparities. I don't know how that inevitably resolves itself. It may resolve itself in some type of a global currency crisis. And then if the global currency crisis unfolds, then inevitably you get, I guess, an alignment under a global world government, a new global currency, and a new world order. So we may be moving towards that.
Talk to us a little bit more about this currency crisis you see erupting. What does that assume about what's going to happen to the dollar?
Well, it assumes that the dollar will utterly get destroyed and become virtually worthless. You know, we have a combined...
Welcome to the Secrets of Money. In this episode we're going to discuss three different topics. The first of which is that the global monetary system is now in terminal breakdown. Then we're going to look at why a sudden devaluation in the US dollar will trigger the collapse of the system. And then lastly, we're going to look at debunking all this talk of economic recovery. So let's take it from the top. So what's wrong with the system and why is it breaking down? Well, to answer that, you need to take a look at its history. The modern monetary system was born when President Nixon broke the US dollar's link to gold in 1971. In breaking up the old gold-linked Bretton Woods system, the fiat money fractional reserve banking system was born, and we entered into a period of unrestrained money creation. A period of perpetual indebtedness. See, in today's monetary system, money is debt. Yeah, sure, there's the exception of notes and coins which come from the mint, but that forms only around 4% of the money supply in Western economies. The rest is electronically created by central banks or predominantly by private banks in the form of loans. Money is literally borrowed into existence as debt, and when the debt's repaid, the money ceases to exist. Here we are at the Federal Reserve Bank in Washington, D.C. Some would say the very apex of the global monetary system. Now this is the Eccles Building, named after Fed Chairman Mariner Eccles, who held the post for 14 years. He once said, "That's what our money system is. If there were no debts in our money system, there wouldn't be any money." Now I know that sounds absurd, but the plot thickens. See, when banks create money as debt, they only create the principal that we borrow. Now, of course, we borrowers must pay back that principal plus the interest. So to make the repayments, the borrower goes to work and is paid an income out of what's known as the economy's money supply. But by nature of the system, every dollar in that money supply must also have been borrowed into existence as principal. So if the entire money supply is debt borrowed as principal, you might ask, where does all the money come from to pay the interest? And the answer is that it doesn't exist. See, each year, enough new money must be loaned into existence to cover the interest payments on all the past outstanding debt. Therefore, this monetary system is based on the premise that the money supply, or the debt, must increase at an exponential rate, or there isn't enough money in supply to service all the existing debts, and they begin to default in a deflationary collapse. Since new debt is being created to service the existing debts, what we have here with this system unfortunately sounds a hell of a lot like a Ponzi scheme. In fact, the parallels drawn between the global monetary system and Bernie Madoff's $65 billion Ponzi scheme fraud are striking. Now, this cartoonist has depicted the situation perfectly. The police are knocking at the door of Madoff Investments and he says, "You're under arrest for running an illegal Ponzi scheme." The US financial system responds, "They're illegal?" Now, he's hit the nail on the head. Just as Bernie's new client contributions were used to pay out returns to old clients, in the global monetary system, the new borrowings are used to pay the interest on existing debt. Now, all Ponzi schemes eventually fail, right? Madoff's scheme, which he ran from this building here in New York City, lasted 17 years. The global monetary system, run by the central banks of the world, has gone on for 38 years, and, well, it's surprising that it's lasted this long. In fact, it's been our banks' ability to entice us back to the debt trough that has kept the thing going for so long. Take a look at the timeline of the money supply. Now, this is directly indicative of this perpetual indebtedness. And as time's passed, the banks have had to progressively relax their lending standards in order to create enough new debt to feed the system. So, since much of this money creation is done in the form of home loans, a quick look at mortgage lending standards in recent history shows exactly what the banks have had to perpetuate in order to keep up the Ponzi scheme. Now, in the 70s, you needed a 30% deposit to purchase a home. In the 80s, it dropped to 20%. In the 90s, it was down to 5%, and we saw the introduction of low-doc loans, which waived the documentation requirements for, the proof of income. Then since 2000, we've seen no deposit loans and a huge growth in subprime lending, or non-conforming loans as it was called here in Australia. Then from the 1st of July in the year 2000, the government even chimed in with a big carrot in front of the donkey, handing out cash for the first homeowners grant. You can also take a look at global central bank policy of progressively lowering their interest rates since the 1980s. And all these factors have contributed in facilitating the longevity of the Ponzi scheme up until this point. But it's not just home loans. The same can be said for consumer debt. Look at the growth in US credit card debt in comparison to their household income. And then you've got corporate debt and state and federal government debt. You pile it all onto the same chart and you get the exact same exponential curve. And the US isn't alone either. You can see here that Australia's household debt to disposable income ratio is actually higher than in the US. Back in the corporate debt arena, you've got the investment bank's gargantuan bets in the OTC derivatives market. Now, the BIS has got record of the total notional value of OTC derivatives for around 600 trillion, but since it's unregulated, they'd really have no idea. There's very good evidence that suggests that the real value is well over $1 quadrillion. Now, that's about 20 times the entire world's GDP.